In this video, we are going to talk about what's a long-term time horizon for crypto. So before starting this video, like this video and subscribe to our YouTube channel for future updates. Cryptocurrency is unlike any other form of investment. The people who are in it for the long haul, the people who see it as a cash grab, and the people who are investing due to fear of missing out are still becoming obvious. Before buying or selling any kind of asset, most investors have a general concept of how long they intend to keep anything in their portfolio. Whether it's a target date fund or simply a medium-term investment vehicle started for, say, a down payment on a home, there's been enough precedent for the majority of asset classes that retail investors can normally plan how long their cash will be tied up. For example, a target date fund is an investment vehicle that is designed to meet a specific date in the future. Cryptography, on the other hand, is not the same. With just a little bit more than a decade of data, and that's for Bitcoin, not the 16,000 plus altcoins in circulation, it's still becoming clear who's in it for the long haul, who sees it as a cash grab, and who's investing solely for the fear of missing out. And that's just for Bitcoin. There are over 16,000 different altcoins in circulation, FOMO. Regardless of the circumstances, it is critical to have a solid investment thesis that articulates the why behind your cryptocurrency investments. This assists you in determining how long to hold on to the cryptocurrency, as well as determining whether you are more of a trader or more of a subscriber to the HODL philosophy, which literally translates to hold on for dear life and describes an approach to cryptocurrency investing that is more long-term. It turns out that the answer to that question is contingent on the type of cryptocurrency that most interests you. Armando Aguilar, an independent crypto analyst and a former digital asset strategist at Fundstrat Global Advisors, stated that the cryptocurrency and blockchain area is still in its early stage. The crypto and blockchain space is still in its early stage, he added. The length of holding periods is determined by the investors. Crypto devotees and purists who think blockchain technology and digital currencies are the wave of the future often have the intention of keeping their cryptocurrency holdings for many years to come. According to Aguilar, these investors should put their money into tokens that reflect high-quality applications, protocols, and ecosystems that have robust communities behind them. When looking at market capitalization and trading volume, all of the indicators for liquidity should be present. In addition, the asset ought to have proof that suggests strong implementation and uptake, in addition to the capacity to resist volatility. In the meantime, investors who speculate or trade for the short term may hold cryptocurrency for shorter or longer periods of time. According to Aguilar, holding periods can range anywhere from a few hours to a few days to a few months or less. If we are to compare it to the curve of internet adoption over time, we can consider the long term to be anywhere between 5 and 10 years in the future. Short-term strategies are analogous to those used in the stock market and include day trading, arbitrage, and other maneuvers designed to facilitate rapid reselling and subsequent profits. Investors have the ability to buy, sell, and trade cryptocurrencies on a daily basis as often as they like, using popular cryptocurrency exchanges like Binance, Coinbase, and Kraken, amongst others. A strategy lasting between 6 and 24 months, on the other hand, requires investors to take into account factors such as planned network upgrades, partnerships, roadmaps, and project developments that have the possibility of coming to fruition and, as a consequence, seeing positive price momentum. According to what Aguilar has stated, these strategies are based on short to medium-term analyses where adoption, integration, and business scalability have a major role in the role that they play in the investment analysis for investors. People who follow the latest developments in the cryptocurrency industry or even have a foothold in the sector are typically the ones who are successful in putting strategies into action that require at least 3 years to complete. According to Aguilar, this may include venture capitalists, family offices, and other long-term investors who have access to early-stage deals at lower valuations, but are locked in their investments for longer periods of time. These investors are also required to hold on to their investments for longer periods of time. While an investor is hodling, they may also make other moves related to decentralized finance, DeFi, such as lending and staking, which may allow them to earn interest on their cryptocurrency holdings. Other decentralized finance, DeFi, moves include, in these kinds of circumstances, they might agree to have their cryptocurrency locked up in the ecosystem and put to use validating transactions in exchange for an interest-based form of passive income. Additionally, there is always the possibility that the value of their crypto assets will increase, which could result in a gain over a longer period of time. Your job as a financial advisor is to assist your clients in determining the why behind their crypto investment thesis, which will ultimately lead them to a decision regarding the time horizon for their investment. There are dozens of ways to invest in blockchain technology, each of which is designed to appeal to a different type of investor. Many financial advisors are of the opinion that blockchain technology may be a good long-term investment, from passive to more aggressive. Margarita Chang, a licensed financial advisor located in Washington, D.C., stated that the technology behind cryptocurrencies known as blockchain is what drives their value. Investing in the technology that underpins cryptocurrencies, such as digital payments or fintech, is one way to profit from cryptocurrency without taking on as much of the associated risk. That eliminates the need for you to struggle with feelings of impending doom, FOMO. It's possible that you won't see quite as much upside, but you'll still benefit from having that exposure. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.